The current housing market is unlike any that we've seen in the last couple of years. We're starting to get back to a more traditional housing market. So, with that, what should you be thinking about? In today's episode, we're addressing the 5 questions that you should be asking yourself if you're buying a home in the current housing market. So, Josh, with that said, where do we begin?
I like that you called it a more traditional market. Some will say normal. If you go back and look at the last 20, 25 years, I don't know who had a normal market, up, down, sideways, lots of different types of market. But most importantly, a few weeks back in an episode, you had mentioned the buzzword of the day is bifurcated, very different markets around the country. So we're going to talk about that. We have a very defined, in years of doing this show, of doing the live show, answering questions, and 50 years plus combined of talking to people. These really are the questions that you need to be able to answer for yourself to be able to decide affirmatively, I am in the market to buy a house now. So I think it's a good conversation.
Yeah, and with that, kind of put them in somewhat of a sequential order where we think you should start with regards to a foundation and then, talking about your market and then personal things that could or, may keep you from being a buyer right now in the market. So Josh, when we talk about foundation, we talk about stability, we talk about, where you are personally, what's that first question that people need to be thinking about?
So is now the right time for me to purchase? Is the key part there is me. People get hung up, Jeb, on this, well, I'm this age, or I just got married, or we just had a kid, or my dad thinks I should buy a house. Is it right for me? And everyone is different. And society, people in general are different. So when we look at this right now, you say the average first-time homebuyer is like 38. Normally that is in the earlier 30s, and historically it's been in the late 20s. So don't ever look and say, what's normal or what should I be doing and feel external pressures. You have to go through and say, is now the right time for me? And for most people, the first place they start with that is, are my finances stable? So finances, do I have good credit? Are my debts in line? Do I have enough income to pay my bills and pay a projected payment? And with that income, stability in my career and stability in sort of being protected against bad things, but also being aware of good things that may necessitate you not being in a location. Some people are in a career or an industry where they're going to have to go. I had a client a few years ago that owned a really nice house here in California, and they're a Costco store manager. Well, there's more people in line for stores than there are Costco stores in California. He had to uproot and move the family to Texas. That's not uncommon. Many people, the next progression in their career in a good way is to go somewhere else. So really that whole picture of employment, finances, credit is the big one. And then sort of that second piece of it is stability in terms of a relationship. I can use myself for an example. Like I could have probably bought my first home a couple of years earlier, but I didn't know what was going on. I was in a long distance relationship with my wife. She was going to come here. Was it going to work out? Was it not going to work out when she was here locally? What do we want? What do we need? So all of those questions sort of come in for me when I'm saying, is now the right time for me, meaning an individual buyer, despite the fact that we've gone over it. Over the long haul, everyone should buy a home and probably wants to buy a home. Doesn't mean it's always the right time for you. And that's where, for me, that discussion starts. How about you?
Well, I like that. Let's talk story time here. So my wife and I bought the home that, a home that we owned for almost 12 years back in 2012. That was the right time for us, newly getting married, currently in an apartment, one kid just being born. And the idea was that we wanted other kids and we wanted them to have an area where they could play, a neighborhood, where they could run around. All of these things that we didn't feel like the apartment life really gave us an opportunity to provide at that time. And for me, Josh, I was coming out of, it just in general, a market with a housing crash, right? I mean, we saw the biggest crash ever recorded between 07 and 09, 2010. And I was somewhat timid to buy another house because I had gone through that. And so I wasn't thinking about the family piece so much. I was more thinking about the financial piece. Am I ready to take this on again? And after conversations with my wife, her mom, just in general, we started talking about, just life events in general. Like, what is it we're trying to do here? And it kind of put things in perspective. And it was like, okay, this is what we should be doing because it's that time in our life. Because previously, when I purchased homes in previous lives, if you will, it wasn't for those reasons. I wasn't buying property because I wanted those. It was buying a property because that's what I thought I was supposed to do, which was all the wrong reason. Now, some of them worked out, some of them didn't. But at the end of the day, it was all about stability, all about foundation. And I'll be honest, I never thought about, where's the value of this property going to be in a year? Where's the value of this property going to be in 2 or 3 years? It was basically, hey, we're going to have a couple more kids. This property has 3 bedrooms. That's going to give us what we need over, the next couple of years. Am I able to, afford this? My wife didn't work. She was planning to be a stay-at-home mom. So could I afford this on my own salary? All of those different things. That's what I was thinking about. And so for me, that became the driving force, if you will, of home ownership and why we bought back in 2012 when we originally did.
And it's funny, I had never really thought about your situation as being kind of the perfect example of what this should look like. Because like you said, you had owned a home before, you went through a divorce, you had a financial situation there. Around the same time, we had the housing crash. It impacted your income, your career, get into a new relationship, got married, have a kid coming on the way. So all of those things, that sort of intersection of, are my finances in a place where it's wise to do this? Is my relationship in a place where we need to set roots and be somewhere locally? Do I need more room for a kid? Do I want to raise a kid in an apartment? Really, truly, like the perfect example, because you had all of the elements in there that needed to be considered. So for any of you listening at home, that's what we talk about, of making sure it's the right time for you. There's not a right answer. There's a right answer for you. And the only way to get to that is going through every one of those and asking yourself hard questions and providing yourself honest answers.
And what I can't stress enough, Josh, in what I just said, is that I was never worried about the value of the home. And that sounds crazy because I feel like that's all people care about now. They think of their home as this asset. They think of this home as, hey, this is what's going to get me the next home, or what. That was never what I was thinking. It was always, hey, is this the right home for me now? Am I in a place to make the payment? And all of the things that we're going to talk about in today's video. So just, again, people think of it their own way, but I want to kind of take you back to the foundation of why you're buying versus why people think you should buy in some cases.
We're gonna get to some of these points here in just a minute, but you said you were just thinking, is this the right house for me now? You weren't just thinking now, because you said, hey, we've got a kid. We would like to have at least one more. You ended up with 2 more, and 12 years down the line, 10 years down the line is like, this no longer meets our needs. But we'll get to that when we talk about your timeline. So it needs to be the right house today so that you're not unhappy the day you move in, but it needs to enable you to have a longer time horizon, which again, we'll talk about. So Jeb, to me, number 2, the question that you have to be able to answer, and most people cannot answer for themselves. You can do some research online and get some information, but you really need a local market expert realtor, really, because this is their domain. I'm a real estate investor and a mortgage guy, so I have a pretty good handle on us here locally. But if I'm helping someone in Houston, I'm not an expert on the Houston market. So really, your local real estate expert is going to tell you what is happening in my local market. So before you answer that, I want to just, for everyone listening, this is what I mean by that. If you are interested in buying a condo on the Gulf Coast of Florida, it's a very, very different market that's going to come with very different answers than if you're looking to buy your first single family residence in Connecticut, where the market is incredibly tight, anywhere in the Northeast, incredibly tight, or you're in Phoenix looking to buy a single family home entry level. All of those are very different markets. And the way we answer supply, demand, market trends is going to have a very different impact on, is now the right time for you to buy? So how do you go through that with clients? What do they need to be looking at, considering, and what does their real estate professional need to be providing them to be able to answer this question?
Right. I don't think you should be trying to pick the top in the market or the bottom in the market. Rather, right, going back to question number 1, is it the right time? Yes, it's number 1. Okay, let's think about number 2. And number 2 being the more important factor, because number 2 can influence a lot of other things. But with that, what does your market look like if you're in an area at the moment that is seeing a ton of inventory? You're back to 2019, 2018 levels with regards to supply. Demand's kind of fell off a little bit because of interest rates, affordability, all of the things that we've talked about. And now maybe you're seeing some price declines, something you haven't seen in the last couple of years. Days on the market's going up. These are all reasons to potentially pause and just kind of look at the market and figure out what it is you're trying to accomplish, versus just diving head in, right? Versus, you mentioned Connecticut, or I don't know if you did, or that was a conversation we had prior to coming on, but look at a market, Northeast, Connecticut, some of these markets where, only a couple of homes on the market. Inventory is still really, really tight. Buyer demand is still high because there's not a lot of supply. And again, it's relative, right? It's not that buyer demand is so high. It's just there's not a lot of supply. So the competition is more fierce there. That's a different environment because you're probably going to see more appreciation. You're probably going to see price growth and some of these things that you're maybe not seeing in an area where you have additional supply and that sort of thing. So going back to what you said, Josh, and finding an agent that understands it, finding a source with data. Finding an agent's one thing. There are some great agents out there. Our team here can actually put you in touch with a great agent if you need that, whether, regardless of what state it is, and you can reach us using that link in the description. But what I want to stress here is knowing the questions to ask these people, right? There's a lot of great agents out there that sometimes are unwilling to give their opinion because they don't want to shoot themselves in the foot. They don't want to give quote unquote bad advice, say, hey, you shouldn't buy, and then prices go up. It's asking the right questions about supply, asking the right questions about prices, what typically happens this time of year with inventory, seasonality, all of these things so that you can make an educated decision, right? What I've seen too often, Josh, is people wait on the sidelines, waiting for the perfect opportunity because they do see inventory pick up. They do see prices start to come down and they think, well, I'm just going to wait until it comes down even further. And then you see the market start to turn a little bit and they go, that's not a turn. I'm not getting in yet. And then it goes up and they go, well, what just happened? I'm just going to wait for it to come back down again. And then there is no down again. And then 3 or 4 years later, they've missed out. So don't be the person that is waiting so much that you miss it, but also be hesitant in the right situations, right? You don't need to go rush and buy a house today in most markets out there, but you do need to understand what you're getting into too.
Well, let's just pick a different word. Don't be hesitant. Be deliberate. And that's what we're talking about today. These are the questions that you have to ask yourself honestly and answer accurately to determine. I mean, if you're listening to this show, you're educating yourself about buying a home. So you are interested in buying a home. Maybe you haven't answered that question and said, hey, this is the right time for me, or I am ready to make the move, but you're asking the right questions. So with that, Jeb, next one here we're going to kind of go to is one of my big pet peeves. Am I comfortable with the monthly payment? And it kind of goes without saying, if you're going to buy a house, you need to be comfortable with that payment. It's not as manipulable as, say, an auto, where you could go in and say, okay, if I put $5,000 down and I finance this for 3 years, what is it? You go, oh my God, that's terrible. And they go, what would you like your payment to be? It needs to be $425. Okay, if we stretch that out to 10 years, we can get that payment down where you want it to be. Mortgages, for the most part, are 30 years. But we've heard since 2022, when rates started going up, this whole idea, marry the house, date the rate. The underlying belief there is that at some point, rates are going to go lower. And I agree with it in this standpoint, in that if you buy with a 30-year fix and you are comfortable with the payment, is a great probability that there's going to be windows for you to be able to refinance. So that 30-year fixed rate sets the worst payment with the option to go lower anytime the market moves in our favor. Anytime there's a recession, that we have the ability to do that. As long as you can qualify for the loan, we have the option to move it lower. No one should be counting on that. I can tell you, Jeb, the people that I have seen the most stressed over the last couple of years are the people reaching out, want to get on our rate watch, or when rates dip, I have to get this done as quickly as possible. I did a 2-1 buy down. I cannot afford the payment and it's going to adjust. It adjusted one time. It's getting ready to adjust the second time. I can't do it. We've got to get this down. So sort of the tricks of making something more affordable, like, you have to ask yourself, even if you decide a 1-0 buy down where the rate is lower for the first year, or a 2-1 where it's lower for the first 2 years, you got to ask yourself, if I didn't do this, would I be comfortable with this payment today? That can be a strategy to buy time in the hope and belief that there's going to be an ability to exercise that option for a lower rate, but we cannot be counting on it. You have to be comfortable with that payment on the way in. And this has truly gotten absurd. I talked to a buyer listener to the show 3 weeks ago, and she says, I'm pre-approved, and we go through it. She says, I'm pre-approved for 450. Don't want to go over 350. And she says, well, tell me about this. The loan officer I'm talking to is really, really pushing me to do a 2-1 buy down. I'm like, why? Well, they just think it's good because rates are going to go lower. I say, well, a 2-1 buy down is not free. It can be paid by you by taking a higher end interest rate, and that lender premium for the higher rate is used to subsidize the first 2 years. Or it can come from the seller. And if the seller is willing to pay 2% of the sale price or the 2% of your loan amount to buy it down, they would also take 2% less or take that amount off the price of the home. So nothing's free. There's no free ride. A lot of loan officers want to show you how creative they are and show you what they can do to get a lower payment. But you have to look at what is today's 30-year fixed PITI all in, including association dues, any assessments, special taxes, CDDs, Mello-Roos, any and all of that stuff. And I'm not sure that everyone is looking at it that way.
Yeah, I like to think of this as comfortable doesn't mean you like it, right? Bought a house, 15 months or so ago, 16 months ago. At the time, was taking an interest rate of 7%. Fortunately, I've been able to get that rate down to 6% because I watched the market and was able to take advantage of these dips in the market and take advantage of a lower rate. Now, when I went in to buy that home, I was comfortable if the payment never got below 7%. I wasn't going to like it. It was something I was probably going to bitch about constantly.
He was going to curse about it at least once a week out loud, walking
but
around.
I wasn't going to lose my house because the interest rate didn't drop. And I think there's a lot of people out there buying homes with the intention that rates are going to go lower, and that's the only way they're going to be able to afford it. If that is the case, you should not be a home buyer. You should rather wait until you have additional funds to make the payment more comfortable, till rates come down, something that puts you in a better position where comfortability is a word that you're, quote unquote, comfortable using in that situation. So being comfortable, again, is just knowing that if at the end of the day, rates never drop, that is your payment, and that's what you're willing to pay for 30 years or as long as you own that home. So that's what we're talking about there. That's going to take us in, Josh, into the next thing about money. Money is one of those things where in any other scenario in life, I don't know that people are willing to use every dime they have to buy something. Like, people don't go to the grocery store and say, I have $200 in my account. I'm going to buy $200 worth of groceries and I'm going to leave with nothing. People do that when they buy houses, Josh. They say, all I have is 3.5% down, 5%, whatever the number is. And they put 100% of that into the property and they leave with no money out of pocket. That is not a good position to be in. You have to have money for a rainy day. Call it an emergency fund, call it whatever you want, but you have to have some savings outside of your down payment and closing costs.
100%. 100%. There's really no dispute of that. And it doesn't, liquid is ideal. 3 months of PITI sitting in a separate account would be awesome. But, if you're looking at an entry level home and that payment is $2,800 a month, what are we talking about? We're talking about, $8,000 something that would be sitting over there. You can have it in a 401k because you can access your 401k in an emergency. You can get an emergency withdrawal. If you have, something with younger buyers that has become more common is having an IRA, a Roth IRA. A Roth IRA, you can withdraw your contributions, no penalty. So even though you're not of retirement age, you can't withdraw any of the growth, but you can. So there are other avenues. Like if you have some money in crypto, like I have people right now, they're like, hey, we've got like $10,000 in crypto, or we got $7,000 in crypto, and we don't want to take it out because it's doing great. Well, from the election through the beginning of the year, it was great. But just in the last week, we've seen runs in Bitcoin up 10% and down 10%. It's hard to rely on that. Hopefully if you find yourself in trouble and you need money, it's jumped 50% and you have even more, but it could just as easily drop 50%. It's an asset class that has shown itself to be very volatile. This is not me telling you don't have crypto. I own crypto. I think everyone should have a small amount of their wealth in crypto, but that doesn't fall under this category of having money that you could access in terms of an emergency. And like a key critical difference here, Jeb, is if I spend every dime I have on my deposit on my rent and my first month's rent so I can move in, and I can't make the payment next month, that's really a problem for my landlord. It's not that big of a problem for me. It's going to take him a few weeks to get me out of there. I may be able to scrape up some cash. If I own the home and I have no money and I can't make the payment next month, that's a different situation. It's going to start immediately impacting your credit in terms of a late payment after 30 days. It can affect your ability to get out of that in terms of a refinance, and selling under pressure is not a good thing. So from that standpoint, this is your best buffer against having to make an emergency decision that you're not comfortable with.
That and you just want some money, set aside for maintenance stuff, right? I mean, I see a lot of videos, a lot of content out there created about you shouldn't own a home. You should always rent because maintenance. You're going to have to pay for all of these things over the course of owning that home. Yes, there are things that pop up when you're a homeowner, but they're not every week. They're not every month. They're not every year. There are things that happen, occasionally. Water heaters don't go out every year, right? They typically last 10, 15, 20 years in some cases. Same with heating and air conditioning and roofs and all of these things. But there's this belief out there that, well, you shouldn't do any of that. You should just rent because renting's better because your landlord's going to take care of it. Yeah, maybe your landlord does, maybe they don't. But at the end of the day, as a homeowner, you should have some money set aside in case things happen so that they can be repaired in a timely manner. And once they're repaired, they're typically off the book for some period of time. But either way, you want to be able to have that fund so you're not stressed, right? Buying a home is an emotional process. In some cases, it can be an emotional thing, especially if you're dealing with other things in your life, relationship issues, financial issues in other places. So when you have some money set aside, it takes some of that stress out of the situation so that you can just, have, again, a little bit of a foundation, a little bit of comfort in knowing that, hey, if something goes wrong here, I'm still in a good place. So with that, Josh, time horizon. Time horizon, you said number 2 was the most important for you. I think time horizon is probably one of the more important for me just because of where real estate has gone over the last couple of years and what we're likely to see over the next 5 to 10 years with regard to appreciation. What are your thoughts?
We're going to go to my favorite story of all time. My wife's friend's parents wanted to buy a home in 2006. We went through it, told them, hey, not the best idea. You guys have rented for the last 20 years. If we haven't jumped in yet, this is probably not the right time. They said, we've rented for 20 years. We calculated it. Over the 20 years, we could have already owned that home. We both have good careers, good jobs, make plenty of money. We can afford the payment. Everything that we've talked about up to this point, they answered affirmatively. They said, we're going to buy this house and we're going to pay it off over the next 30 years. And we don't care. And they were just about 40 at that time. So 70 years old, we'll have our house paid for. So what happened? They bought that house, about $650,000. At the worst level, it was down about 50%. So they were about $300,000 underwater. At no point did they care. They continued making the payments. And now today, that home is worth almost 3 times what they paid for it. So that's not to say, hey, buy any time you want. It will work out for you. But it's to say, when you have a long-term time horizon, I don't know what's going to happen with home prices over the next 36 months. I do know what's going to happen with home prices over the next 36 years. So from that perspective, the longer term time horizon you have, the less you have to worry about market fluctuations in the near term.
Yeah, there's 2 sayings, Josh, that I like to go to. One is the saying of when was the best time to plant a tree? Like 50 years ago. When's the next best time? Today, right now, right? And it's that idea of buying real estate and waiting versus waiting to buy real estate, right? It's this idea that the more time you have on your side, the better opportunity you're going to have for appreciation. There's a reason that homeowners have a 40 times greater net worth than renters. Again, there's other things that flow into that, but the large majority of people's retirement sits in real estate, and that's a good reason why, right? It's that appreciation that happens over time, the forced savings, fixing that payment over an extended period of time while rents continue to go up. And that's really what it's about. It's not a push to get you to go out and buy real estate. It's about knowing the right questions to ask when the opportunity is there, when you're thinking about it, to see whether or not you're a candidate. Not everybody's a candidate to buy a home, and that's okay, right? Patience. What Dave Ramsey says, renting is buying patience until you're ready to buy a home, something along those lines. I kind of screwed that up, but the idea is that it's okay to rent. It's just you're buying patience until the right time presents itself. So with that, Josh, I think we've talked about the important pieces here. What's final advice going out if anybody's considering buying a home?
At a certain point, I start feeling like my dad, where you're like, Dad, you've told me that advice 73 times. I don't need to hear it anymore. But I think this is a 20-minute nutshell of what you need to go through in your head. And again, talk about biases. Well, there's selection bias for our audience. So anyone who sees a podcast called The Educated Homebuyer or sees a video on the channel called The Educated Homebuyer and clicks on it, they're prone to be a certain type of person. So you've probably already asked yourself these questions. You may not have asked all of them. You may not have looked at them quite as deeply as we've talked about. But if you go through all of these, I'm not saying this is comprehensive, but in a 20-minute conversation, it's going to put you ahead of 95% of buyers to make sure that you're doing something prudent. You're putting yourself in the right position. It fits with your goals, your hopes, your aspirations, your current stage in life, and where you want to be 3, 5, 10, 20, 30 years from now. And it sounds crazy saying 30 years from now. I think I've told you guys, bought my house in 2002, and we were like, 10 years max, we'll be out of here. Here we are 23 years later, and we're like, yeah, they're probably going to wheel us out of here in a black bag one day, because this is our ending home. So time goes faster than you think, but you need to look at that long-term time horizon to make the best decisions for you, your family, your spouse, your significant other, your kids, whoever is involved today and tomorrow.
It's never too early to start the process. So whether you check 3 of these questions off the list or all 5 of them, if you need guidance, you need help in the process, you have questions, reach out to us using that link in the description of the video. Until next time, make sure you're buying right, borrowing smart, and building wealth. Adios.
Amigos.